Welcome to Real Estate Profits with Purpose. I'm your host, Ian Boshoff, here with my co-host, Jessica Couch. How are you doing today, Jessica?
Wonderful.
Well, thanks for listening and tuning in to 1380 The Answer here on 1380 The Answer. So I just wanted to talk about some amazing information that is coming out. But first, just wanted to say that our mortgage and real estate brokerage here provides a streamlined white glove service approach with each client, ranging from first-time home buyers, homeowners, new real estate investors emerging into the housing market. And when you work with us, we donate 10% of our profits to the Sweet Dreams Foundation. So thank you for those to listen to the show and have donated or have worked with us throughout the show. Be sure to give us a call if you have a question during or after the show at 916-872-7177. That's 872-7177. Or log on to promortgagerealty.com if you like to be a part of our cause or have questions. Today, I am going to talk a little bit about what's going on with rates. The Fed has had a meeting, and I'd like to read some information from the breakdown of the Fed, which they unanimously paused for a second meeting in a row, to keeping the Fed funds rate in the range between 5.25% and 5.5%. The Fed statement was pretty similar to the previous one, but they upgraded the economy, saying it is now strong versus solid.
Interesting.
So apparently the word strong is not as solid as solid. So the way they interpret this...
It is all interpretation, right?
Yeah, it's all interpreted. The way they interpret that is strong is not as strong as solid, okay? So if you're with me there, following me here, that's what that means. And also, they upgraded their view on the labor market after a strong September jobs report, saying the job gains were moderated. So moderated is not as strong.
Right.
Yeah. So strong is stronger than solid, or no, strong is less strong than solid.
So, right.
And moderated is not as good as the September job report.
Interesting.
Slowed. So basically, Powell did say the labor supply and demand continues to come into a better balance. One of the most important things he said is that a tighter financial and credit conditions will weigh on economic activity, hiring, and inflation. The new world in the statement is financial. This is a nod to higher yields tightening for the Fed. The Fed has no reasons to hike another 25 basis points, as the only thing they will reduce those tighter financial conditions is slowing the economy and lowering inflation, in which this case the Fed does not need to hike and would likely start talking about cutting rates.
I'm so glad you brought this up, and thank you for that update, because I know this is a question I get 8 to 10 times a day. You know, where are rates going to go? What's going to happen, and when?
Yeah.
That is the big question for everyone. So I'm glad you've updated us on that. You know, where are we sitting right now with rates?
We've been talking about this for a while. Well, early this week, we were almost at 7.875 to 8%. And I almost had a heart attack. You know, I'm like, what is going on here? And finally, the problem is that the Fed, they released the jobs report.
Right.
And every time they release the jobs report, it's wrong.
Right.
And they
moderated.
And so what they do is the trading reacts to that that bogus jobs report, and then they say we're correcting this jobs report about 2 to 3 weeks later when they get the actual additional numbers. And this happens every single time. So we get that upward spike, that low down spike. And so to answer your question, long-winded, rates improved by almost 0.375% in 2 days. Recently.
You called me with really exciting news about one of our borrowers that's doing FHA.
Yes. He was at 7% when we started, and they got in contract. We didn't lock. I was reading some news. Go figure.
Yeah.
And so the next day, rates dropped 0.25%, which is a big move. And so that's 6.75%.
Which would give us what if we did a 2-1 buy down?
Well, I can go into those numbers, but even today it's actually gone down even lower based on what the Fed said. So we're probably at 6.625.
Wow.
And these are much lower numbers than what we've been seeing.
Absolutely.
His scenario at 7%, was $540,000 loan amount, $550 purchase price, a 30-year fixed FHA loan. Now, if you include everything like tax, insurance, interest, the whole kit and caboodle, the whole kit and caboodle is $4,435.
Okay.
That's
Two income family. They're
yeah,
going to have to make that work.
That's a heavy play. But now when you implement the 2-1 buy down, which we'll go into detail, your first year payment will be not $4,435. It will be $3,741.
Tolerable. Okay. Tolerable.
The second year it'll be $4,080.
Okay.
Now the third year you're back up to the $4,435 and every year thereafter.
Unless I can refine. You're keeping in touch with me, so I'm going to know when the time is right to pull the trigger and get that rate locked in lower.
Yes. And so there's like multiple variances. I know, Jessica, you do a ton of 2-1 buy down. I mean, this is your play.
Yep.
So let me just kind of give a breakdown. How you get this 2-1 buy down? How do you get it?
Oh, we get the seller to pay for it.
Okay.
It is free money.
Free money.
Free money. If you have somebody that's super aggressive, like we are over here, pushing for you and getting the seller to cover those costs. We have enough inventory right now that we're getting the seller to cover that. And I'll tell you a little trick that I don't often throw out there, but something we do is we do a 24-hour expiration. We let the seller know, I've got 5. I have 5 options here. You're number 1. 24 hours. Take it or leave it. Because then I've got number 2, 3, 4, and 5. And we're getting 5% back on a lot of these to offset their closing costs. We did this with another client of ours just recently. She came in with 5% down. That's what they had to work with. We got the seller to cover all the closing costs and that buy down, making the payment tolerable.
And this is why the show today is about why buy now or wait for rates to drop.
Right.
Because if you're buying now,
yeah.
you're able to negotiate. Mm-hmm. You're able to negotiate those credits. Mm-hmm. You're able to negotiate a lower price. You're able to get a good deal on that property.
Right.
Right. And we're talking a lot of money. So, so if you're thinking 4 to 5% credit, right, on some of your deals, these houses are worth $600,000. That's $30,000.
That was exactly the number we offered. 600. I think they had us bring it up to 614, which financing that additional amount was a difference of like $22.
Yep.
It was worthy of what she was getting on the back end to make sure we had the buy down and the closing costs, so they were saving money out of their pocket.
So when we're in a market like this, Jessica, and this is the second time the Fed hasn't raised rates.
Right.
Where do you think rates are going to go if they've been hiking them for 13 straight months?
Oh, they're going to come down, but we're not going to see that until next year. Mm-hmm. So I sound like a broken record, but this is such a golden opportunity right now. If we can get you in now as rates come down, you'll have equity, especially if you're going in with FHA. We have the PMI. I know it's a lot of details, but we have this premium mortgage interest. If we can remove that as well as locking in a lower rate when we refinance in 12 to 15 months, which seems reasonable. Yeah. So we've got 2 years for this. We could then lock in a lower payment, because not only do you have the lower 30% or 30-year fixed, we also can remove your PMI with any luck at that point. Yeah. So we know as rates come down, prices are going to increase. Good time to get in with FHA, especially when you can get something like 6.8 with the buy down. We're looking at 4.8.
Yeah, those rates are.
I don't know that we're ever going to see a 4.8 again.
I hope we do, and I think it could be possible. But a lot of people are saying, well, why don't I just do a long-term buy down? Well, there's 2 reasons. If you get an FHA loan, you're stuck with mortgage insurance for the life of the loan unless you put 10% down. Right. And then the other, because you want to get rid of that PMI. You don't need it once you have that equity. Yeah. On FHA, it's on the life of the loan unless you have 10% down. So that's just one detail. Number 2 is you have that PMI. The PMI just keeps going until you take it off. And by taking it off, you have to refinance or sell.
Taking it off, right.
So, now, the short-term buy-downs are what we're doing on every loan. I would not do a deal without a short-term buy-down if you're in the market to buy right now. And if your agent isn't doing it, tell them they need to do it or give us a call. So, again, you can go to promortgagerealty.com. You can talk to myself, ask for Jessica, and we'll be able to go through, kind of walk you through what we're doing. I mean, just on a $550,000 house, that's $12,587 that we're negotiating in the temporary buy-down. We're not doing a long-term buy-down because it does not move the needle in your rate, right? So your rate, let's say you can get 6.875 today on FHA. You're going to be at, maybe if you do a long-term buy-down, for $12,000, you're going to maybe move that needle from 6.875 to 6.375. What's going to happen in 2 years, rates are going to fall below 6.375. You just spent $12,000 buying the rate down that may move the needle on payment by $150. Right. What we're doing on these 2-1 buy downs, the seller is paying for them, and your payment is dropping, in some cases, $693 in this situation for the first year, a month.
It's a strategy. This
Right?
is why you need to chat with Ian and you really get the strategy, because I'm being serious here. This is what we usually do. We
It's
know,
true.
get on the phone with the family and go, let's talk about what the goal is. Is this a 3-year plan, a 5-year plan?
Yeah.
Are your parents moving in with you? Is this your forever home? Let's look at it. This isn't a one size fits all.
Yeah.
So I think having a team that's really strategizing for you, making these decisions for you and aggressively working for you to get everything we can, that's the difference.
That is a
like
big
anybody can
difference.
just write a contract. If they're not really aggressively fighting for you, you're not getting everything.
Fire them.
Yeah.
Fire the agent. Fire the agent. Work with the pros. So we'll be coming back soon here on a break, and I just wanted to ask them. We'll continue with why you should buy now or wait for rates to drop. And I do have a question is coming up on the answer here is. Will we ever see the California Dream Down Payment Assistance Program again?
Ooh.
Well, make sure you stick around. You don't want to miss this. So we'll be back after this.
Sweet Dreams Foundation is a 501c3 nonprofit whose mission is to glorify God by spreading peace, hope, and love to families with medically fragile babies and children. They offer dream bedrooms to children battling life-threatening illnesses, and their Ruse Baby program creates an atmosphere that will lift the spirit of the child, where they can laugh, play, and let their inner light shine. To learn more about the Sweet Dreams Foundation, visit sweet-dreams.org. When you work with Pro Mortgage and Realty, you're supporting the Sweet Dreams Foundation. Partner with Pro Mortgage and Realty today to buy or sell a home and help support the Sweet Dreams Foundation to help more children in our communities. Call or text Jessica Couch of Pro Mortgage and Realty today at 916-532-8916. That's 916-532-8916, or visit promortgagerealty.com. Work with the pros. Pro Mortgage and Realty. NMLS number 351319 and DRE number 0174567.
Hi, I'm Ian Boshoff, CEO of Pro Mortgage and Realty. At Pro Mortgage and Realty, we've streamlined the home buying process, providing you the fast mortgage pre-approval and top-performing real estate agents that will negotiate the best price for you, all under one roof. If you call or text to 916-872-7177, that's 916-872-7177, we'll help with those out-of-pocket expenses like home inspection, appraisal, and closing costs. We make it easy. From down payment assistance programs, no income qualifying loans to conventional FHA and VA loans, we have you covered. We'll help you find the right financing program and the right home. Be sure to ask about our temporary buy-down program that's negotiated towards your interest rate and can end up saving you thousands. Work with a team that's with you every step of the way. Work with the pros, Pro Mortgage and Realty. Call 916-872-7177 or visit promortgagerealty.com.
NMLS number 351319, DRE number 017456667.
Welcome to Real Estate Profits with Purpose. I'm here with Jessica Couch, and thank you for tuning in and listening to our lovely show, everyone. Be sure, you want to make sure to text to 916-872-7177 for any questions during or after the show. We do have some text questions to answer coming up, and we did like to answer some of the questions that did come in. But before that, our subject today is, should you buy now or wait for others to wait for rates to drop? And we've been talking about the temporary buy down, which is the hottest thing going out on the market, how to get your payment 2% lower than market rate for the first year. And that seems to be the flurry of all contracts of what we're doing here.
I think it's a big buzz right now, but we've been doing this for 6 months plus with every single buyer and
That's
getting
right.
like 5% backs.
Love, yeah, you definitely
We
want
were on this early. The second this program came out, we were like, slam dunk, getting everyone into this.
You definitely want to tune in and keep listening, or subscribe to our YouTube channel, Real Estate Profits with Purpose. We'd love to have you follow us, and you can listen to all of our shows there. But again, tune in to 1380 The Answer on Saturday nights at 8 p.m. So the question that we left before on the previous break was, will we ever see the California Dream Program again?
I keep getting that question. Can you please tell us?
Well, the California Dream Program, just to educate everyone, it was a down payment assistance program, but it was a 20% down payment assistance.
20% is so you don't have the PMI.
So the biggest thing about this product is that you are able to buy more of a house because you're qualifying on only 80% of that purchase price. So it could allow people to get into a larger home, better home, a better neighborhood, you know? And so with that 20%, the only catch is you're sharing equity with CalHFA.
But if you time this right, if you're in touch with us, this is all strategy.
That's right.
If we time this play right, you could really come out of this ahead.
So what the article of CalHFA said, and they also came out with the accessory dwelling unit. We can get into that in another show or into this later. But the California Dream for All Share program was in the board meeting with CalHFA, and CalHFA does and manages all the down payment assistance programs, any grants associated to any new programs that are out there. A lot of lenders out there will say, "Oh, we have a teacher program, we have a fireman program." It's all this. They're just renaming it.
Yeah.
So, but what they said is the Dream for All official program announcement and documents will be coming in January of 2024.
Very exciting.
With applications opening in early spring of 2024. So, Jessica, just so they hear it from someone else, not a lender, what was your experience when this program released?
I had one client that called me and said, "We're qualified for this program." And I said, get your homework done right away. There's homework that accompanies this. Dream program was making everyone wait until they were in contract, which I'm sure they're going to have a better plan this time, but wait until you get into contract to then get your homework done, those classes done. And there was a long wait for that.
Yeah.
So I got these folks into contract within 4 days, and it worked out. But we were at the end of the cutoff. I mean, 4 days from the time the program came out, they got pre-qualified, and it shut down within, I think it was only 7 to 10 days.
Yeah.
There was so much allotted, and it was all gone quickly. So I think the lesson here is if you want to take advantage of this program or any program, the teacher program, the fire program, any of this, CalHFA program, get pre-qualified now or get the process started.
Yeah.
Because most of these folks are not ready to go for 3 to 6 months.
That's
There's
very
some work
important.
to do. And if you're not strategizing right now with Ian, you may not be ready and you could miss this opportunity. So there's not a too early, but you could definitely miss it if you're too late.
Oh,
so
you will.
get started now so you don't miss that opportunity.
I kid you not. The educational piece of this for a lot of the lenders that came out, the day they were releasing it to the lenders so they could explain them to their borrowers so they could be confident about the product, it was fulfilled already. So what happened is everyone that was in line for a regular down payment assistance program, they basically just moved laterally because they were already in contract to this program. So that money went away in 2.5 weeks.
Yeah. Well, yeah. I mean, I was thinking it was 10 days, but I guess you're right. A little bit more than that.
It was 10 days, yeah.
Gone so quick. So, yeah, this is, I think any of these programs, while there's money available, don't miss that opportunity.
Yeah, you have to be ready and be in a position. So if you're thinking about buying or pre-qualifying, we've got to do a soft pull on your credit, which it won't impact your credit score. You need to have your income dialed in, which don't pre-qualify yourself. Let a loan officer do that.
So important.
And then we need to make sure you get that home buyer education already met.
Yeah.
And so then you're in the position to buy. You don't need to do this the day of, because it takes time to put together the paperwork. It takes time for you to fill out that application entirely, and it takes time to figure out all the kinks in your financial situation, if there are any, or credit.
Right.
So,
and then I'm going to need 2 or 3 days shopping with you.
Yeah.
To make it, and with this couple, we found 10 properties. We started same as I always do, like number 1, okay, not a go. Number 2, not a go. Number 3, until we got into contract, and it took a couple of offers.
Yeah, and if your agent isn't available, Jessica is probably the most available agent. No matter what, she will make time or find time.
7 days a week. It is rare that I miss a phone call or a text. I get back to people within 20 minutes. If you don't have an agent that's working that aggressively, fire them.
Yeah.
Because we are not in a market where you're able to play games and get into contract and have this market work for you. You need the market to work for you, and you're going to miss that opportunity unless you are out there actively shopping and getting into contract.
And Jessica, if they are sick of their agent and they don't like their agent's not negotiating buy downs, how do they get a hold of you?
You can call or text me, 916-532-8916, and I'll get right back to you. And we had a young guy that we were able to help not too long ago. Great kid, 20 years old. We've helped two 20-year-olds this year. We just closed with some 26-year-olds as well.
That.
Amazing. But this 20-year-old had an agent that was sending him properties and said, we'll get together in a couple of weeks. And he called me, he said, hey, somebody else from our barbershop told me you were just a dog. I was like, I'll take it. I don't know what that means, but I'll take it. So he said, when will we go start seeing properties? I said, I'll send you a list within an hour and we'll be out this afternoon if you've got it available. He said, tomorrow's my day off. I'm like, great, I'll get you at 10 a.m. We were out shopping immediately. Yeah. And we got into contract pretty quickly and got the seller to pay for all of his closing costs.
Crushed it. This kid, he's a barber, right?
Yep.
He works every day, puts away money. He claims his taxes to show that he's getting income.
Yep.
And we went through the pre-approval process, and this guy's not even 21 years old.
I know.
Bought a condo.
And talented kid too. Talented.
And
yeah.
so that's the kind of hustle that you have. If in 10 years that condo, or in 5 years that condo is going to have at least $100,000 of equity.
Yeah.
And so what is he going to do? He's going to sell it, or he's going to keep it as an investment property and then buy another property. Or
that was his plan from the beginning. Yeah. The mortgage, including the HOA, was $2,000 a month. He was putting a roommate in for $1,000. Like that's a deal, right? $1,000 a month, and you own a place, right?
That's the way to go. Well, I think these are things that we can talk about and discuss, but we want to get back to our show. Is should you buy or wait for rates to drop? So we did we covered the kind of the mentality behind this. We didn't really actually. Everyone's that thinking, should I buy or should I wait? There's a lot of people worried that a crash is going to take place like it did in 2007 and 8 and 9 and with the Lehman Brothers situation, right? Well, people do remember that still.
Absolutely.
And we are well overdue for a recession, which we are pretty much in it now.
True.
And they're not admitting it. They're saying, oh, our economy's strong. And we all know it's not true. So with that being said, the difference between then and now is you're proving your income now. We do have programs where you don't have to prove income, but you need substantial equity, like a 20% down, and you need substantial reserves of cash. And you can consider your cash out as reserves in those programs.
True.
They're called the no ratio program. But you need equity, and they're not 100% financing. So what's different now is you got to qualify with a mortgage, you got to qualify with your credit, and it's my job to help you structure that. But that's one thing that we cover with this show, and I'd like to cover more about this section here is the 2-1 buy down. We always talk about. We did have text questions related to this, so we pulled them up from last week. And one of the questions was, is there going to be a crash? Which is exactly in line with what we're doing here. And should I wait for prices to drop? This is Stephanie from Roseville. You want to answer that one?
I would love to, Stephanie.
Okay.
I have seen not only stability in our pricing, but in many neighborhoods, not all, but in many, a 10% drop overall. So that is a prime time to be able to get in, because as interest rates come down, prices are going to go up. And we have a great amount of inventory right now, which is another big differential between where we were in 2008. We still have a great amount of inventory. We're still seeing building. In fact, like 80% of our sales, I can't remember the exact number that came from it, but a huge amount of statistically from our sales this year has been from new builds. So if we are still seeing a massive amount of building out there, everywhere I'm driving, I see, the Caterpillar, big machinery out there, water trucks. They are building all over. If we were heading into a crash, we would not see this amount of building in new homes.
You're right on.
And that is a
You're
huge
right
portion of what our sales are right now.
Well, that's what Warren Buffett just invested and injected a huge amount of capital to new construction sales. So
they're pumping.
If he is investing into new home sales, then who else is, right?
Right.
Well, don't you have some data right here?
I do.
And that kind of will go through some detail. And why don't you share with us the information you pulled up, Jessica?
So this is according to our National Association of Realtors, but this is just our little tri-area, Sacramento County, Placer County, El Dorado Hills, or El Dorado County. Our median sales price is $859. We have 2.4 months of inventory, which is not a huge amount. We have more inventory than we've seen in quite a while because we didn't have inventory for some time. Like when we were out out searching for the Dream program,
Oh my
there
gosh.
was nothing. We slim pickings, and right now we have all this inventory.
That's
so it
right.
seems like so much, but really we only have 2.4 months, and our median days on the market is 18 days. So I think what we can accredit some of these, the stability in pricing and this pricing drop is things that are not priced aggressively to get into contract right away. That's where I'm seeing a price drop. So if you've been on the market more than 18 days, it's a price drop.
Love that information. You don't want to miss our next topic here. And before we break off, is we have a teaser question for you. Is our cash buyer sitting on the sidelines or snatching up deals? We'll be back after this.
If you or a family member are in the process of buying a home, then you'll want to hear this. Pro Mortgage and Realty has streamlined the home buying process, providing you with mortgage pre-approval and a top-performing real estate agent all under one roof. And if you call or text within the next 10 minutes to 916-872-7177, that's 916-872-7177, they will cover your closing costs. Pro Mortgage and Realty makes it easy. They will negotiate the best deals and save you thousands by using one company. From down payment assistance programs, DSCR loans, FHA and VA loans, and more. They cover all aspects of mortgage and real estate, from finding you the right finance programs to finding you the right home. Work with a company that can be with you throughout the whole home buying process. Call 916-872-7177 or visit ProMortgageRealty.com for more information. Work with the pros. Pro Mortgage and Realty. NMLS number 315319 and DRE number 017456667.
Hi, I'm Jessica Couch. When you're buying or selling your next home, work with an experienced team that knows the business, a local team that knows the market, and that has the skill set to take care of every single detail. We will get you top dollar if you're selling, and we'll help negotiate the best deal if you're buying, all without spending $1 out of your own pocket. Work with Pro Mortgage and Realty. At Pro Mortgage and Realty, we cover those out-of-pocket expenses like inspections, appraisal, and help with your closing costs. It's our commitment to make your next real estate transaction easy and stress-free as possible. We're not all about business. At Pro Mortgage and Realty, we've developed deep roots in the community. We've partnered with local nonprofits, and we give back. Come work with the team that's got your back. Call or text today. Jessica Couch of Pro Mortgage and Realty, 916-532-8916. Or visit us at ProMortgageRealty.com. Work with the pros.
NMLS 351319, DRE 01745667.
Welcome to Real Estate Profits with Purpose. I'm here with Jessica Couch. My name is Ian Boshoff.
Hello.
Thank you for tuning in here every Saturday night at 8 p.m. We wanted to discuss a show that encompasses the reality of what's going on. Is should we buy now or wait for rates to drop? We've been talking about the 2-1 buy down, why you should buy now, and
buy down.
and buy down, and what the Fed's doing about it, where they're not increasing rates and they're not dropping rates, but what goes up must come down, and it sounds like we're on a trajectory for rates to come down. So hopefully that is true. We'll see what happens with the jobs report. But the question before the end of our break here was are cash buyers snatching up properties now, or are they sitting on the sidelines? And according to this article we got off the MBS Highway and the California Association of Realtors, Jessica, can you tell me what percentage of buyers, is it up or down?
Our buyers continue to be up. And
27%?
27%. And
Yeah.
cash buyers are always out there.
Yeah,
Always.
yeah.
So these properties that are cash only, that are priced aggressively, I just had one that a friend of ours had offered on, and there were 12 offers. And the difference of them getting it was a difference of $12,000.
Wow.
That was it. So I think it's having good relationships with our community of other agents out there, being known as a professional that's not going to screw around, and then getting into contract. But these cash buyers, I'm getting, I can't even tell you how many phone calls, texts, and emails in a week from investors that want, to see my properties first before they go to market, which our friends and family always get the inside scoop before we hit market.
So the cash buyers are up 27% right now
Correct.
in 2023.
Correct.
Right. So that tells you if cash buyers are buying now, do you think they know something you don't? If you don't own a property and you've got a guy with a bunch of cash, they have a bunch of cash for a reason.
True.
Right?
True.
And if Warren Buffett is investing into new construction builds, do you think he thinks the market's going to crash?
I think following the advice of those who have led the way, like Warren Buffett, and like I really like to go back to the fact that the cash buyers and all of this building right now. Do you think these folks with millions invested in developing didn't know what's going to happen?
Yeah,
they have people there paying big bucks to pay attention to this stuff.
It's a lot of money.
Yeah, I drive around and see what you notice on the side of the highways and everywhere in the Sacramento region. There's a ton of building going on, and it's going to continue.
And there's a shortage in housing still. And so they're going to continue to build. They're going to continue to sell properties. And the longer you wait, and just if you're waiting for rates to drop, and we're saying this again, if you're waiting for rates to drop, well, so is everybody else, right? Do you want to be along the lines with everybody else, or do you want to be along the lines with the cash buyers and the Warren Buffetts of the group? Now, rates are high. Yes, there are tools that can drop your rate by 2, even 3% for the first couple of years. But if you're buying now, you're buying at a term where there's less buyers in the market. Just like you said earlier, Jessica, the more people in the market, the higher the price of the home goes up.
Yep.
So we don't want to be in that position. You have negotiating powers. Jessica's negotiated $30,000 in the last transaction towards credits.
And that's the big differential.
Yeah.
Right now, you have the opportunity to get those credits.
Yeah.
As the market changes and everyone's out there again,
Good
you are
luck.
not going to have that opportunity.
Good luck.
Yeah.
And even right now, we have cash buyers. You're competing. How many? I mean, when you're making an offer on a house, right? How many of them are cash buyers that you're competing with?
On most of the new first-time buyers, they're not.
Yeah.
They're really not.
Yes.
Those cash buyers are looking for homes that they can get a deal on that are cash only, that don't qualify for financing.
Got it. And then what kind of properties are those?
Those are things that need some work. Those are things that
Lipstick?
need work.
They need
Absolutely,
some
they
lipstick.
need some real work.
Yeah.
It's more than cosmetic if it won't go traditional financing.
They need a full-blown makeover.
Yes, and there's a lot of those out there. Yeah.
The bank-owned stuff.
Yeah,
So-
bank-owned stuff or stuff that, grandma's owned for 40 years. She's going into, skilled nursing or memory care, and no updates have ever been done. It's sometimes these properties where there's some major plumbing work or the roof's been leaking for 20 years.
Yeah.
These are properties that need some work, and I'm definitely seeing those come to market.
And if you are, what I get a lot too is people go, oh, I'd like to buy this foreclosed property, and they don't have any down payment, right? And you can buy a home with no down payment. We have down payment assistance programs, not even the Dream for All. There's a down payment assistance program right now on the market where it's 3.5% down payment assistance, 0 down. So you don't even need an amazing FICO score. We can go up to 580 FICO score, or go down to 580 FICO score on the Dream on another product that is a Chenoa grant program, and we also have something where you pay it back. But these types of programs, they're going to be harder to get into contract on not only the foreclosed properties, but the bank-owned properties are hard to finance. And so you can't finance those on the down payment assistance products. You can finance those with renovation loans.
True. We did one of those not too long ago.
And that guy killed it. He killed it. And I'm not even saying this. I mean, he bought it for $470 or something.
Yeah, and the comps in that neighborhood are close to 8.
Yeah, and he put in, I think the renovation loan was like 100 or 80. No, it was under 60.
It was under 60.
Yeah, and it was a streamlined, so it was a quicker process. But that thing, was it 35,000?
I think it was.
Okay,
yeah.
I'm sorry, I'm going down on my number.
It was a pretty
I'm
low
getting old,
amount
my
that he was able to do, but he only did the bare minimum because this guy has a skill set. So only what was required for financing was done. Everything else he was doing with cash on hand after close of escrow.
Sitting on $300,000.
Absolutely.
Yeah.
That is a huge amount of money and worthy of taking a higher rate for that short term to be able to make that equity.
So that's the main thing is finding the right property, finding the right agent, finding the right scenario, but really understanding what your abilities are. And when you work with Pro Mortgage and Realty, you're working with kind of two companies rolled up in one.
Yep.
You're going to talk to Jessica. She's going to find out what needs you have, what kind of house you need, what size, where, the condition, etc. And then she's going to you're going to talk to a couple lenders, and I will be one of those, and we're going to help strategize the best option for you. And we are looking in your best interest, and this is not just a sales tool. We have to. We're legally obligated to do that.
Right. Well,
so
everybody should be doing it that way, but I
Right.
think this really takes strategizing again
Yeah.
and looking at their whole picture for their family and what their plan is.
And Jessica, I want to let everyone know how they get a hold of you. I think it's 916-532-8916.
Correct. Call or text.
Is Jessica's number. That's 916-532-8916. If you want an agent that's going to swing the bat for you, call her. She knows what she's doing. So I want to continue on to our text message.
Ooh.
She's just a killer agent, by the way. I can't.
I'm aggressive.
She'll wake up in the morning and say, I'm going to get 2 in contract. And by the end of the day, she goes, I got 2 in contract. And so if you want an agent to get in contract and you're banging your head, I tell you what, best agent I've ever seen in 25 years.
Thank you.
So,
Thank you.
I have this is a great question. Okay, so I just graduated college and I want to buy a home. I have a job. Do I need to wait 2 years? And this is Brian from Folsom.
Brian from Folsom. I got this question the other day. Also, this comes up pretty often.
Yeah.
So I think this is a good lending question. I mean,
Yeah.
I know the answer to it, but tell us in
I'm
lender
all,
speak.
Ooh. Okay, so this is a great thing. So if you've been, let's say you're in college and the degree that you're studying in, and you've graduated college, and you have transcripts to perform that, to show that you graduated college, and you go into a line of work where you're working full-time for 6 months, that's 40 hours a week for 6 months, or you're on salary, then you don't need to wait 2 years. You just need 6 months. If you're part-time or you have fluctuating income, then we can still use the income, and your college demonstrates as a 2-year history. So, or any specialty line of education that is a 2-year history, we can use that. You have to have a 2-year work history. College is considered work. So, as long as it's in line with what you're doing. So this is a key thing. Is a lot of people wait 2 years, but they go entry level salary as a nurse, or in other fields where they're making quite good money.
Yeah.
And this is the way to get into it.
Yeah, I had this conversation yesterday with a new doctor, and I said, no, do not wait. I said, here's the areas, and if you can't afford that area, let's look into this area. Here's the number 1, here's the number 2.
Yeah.
The number 3, I do a lot of business in these neighborhoods. It's, right on the cusp, but you could get something, a small 2-bedroom, 1-bath to get started with a detached garage, something we could pop an ADU into. We can make that detached garage into a living quarters. You can rent that out. And his wheels just started turning. He was like, so I shouldn't wait. I'm like, no, we are not waiting. Right now I can get the seller to negotiate this 2-1 buy down, which he didn't know about either. So I think when you're not in the mix of this, you're just sort of thinking about it. You're talking to your parents and other folks that just graduated college. No, they're not real aware of what's going on in today's market. So call us. We'd love to have that conversation. Again, it's strategy. Whether you're a brand new doctor out of school or you're a family going into your second home, let's look at your whole picture and figure out what's going to be best for you guys.
Yeah, that's a baller answer right there. I love it. Here's another question. My credit is below 550. Are there any programs for me to buy a home? I think I'll take this one again. The credit issue is an issue, right? The whole purpose of working with someone up front is to figure out where you're at. We can do loans with 580. We can manually underwrite even lower than that, but you're ultimately going to want to get that score up. I can help people get their score up by 100 points within 3 or 4 months.
Well, you did that on a deal not too long.
Yeah, it's easy. It's a matter of, if you have horrible credit, you have credit that looks like it was in Tijuana for 3 weeks after spring break. And so, it's just been dragged through the gutters, and you've got collections upon collections. Well, just now that you have collections, you can't fix your credit. The only thing you can do is rebuild it. And the way you rebuild it is with secured credit cards.
Right.
And secured credit cards are going to be your saving grace as long as you pay it off every month, pay it in full, and don't get caught behind that rat race of letting that interest gain up on you. So get 2 to 3 credit cards, slowly build that credit up. In 3 to 6 months, your score is going to go up 100 points. If you get 3 credit cards.
Well, and I often talk to people that don't have any credit. So this is the kind of free information that somebody needs that's scared to call. They don't know what's going to happen. I don't know. Are you going to judge me, or are you going to charge me? Like, this is free. Call in and he will give you this information and help set it up. Maybe you need 3 to 6 months, but there's a starting point. If you don't have any credit, let's get it.
I've seen 491. I had a 492 in 2000.
Wow.
I started the business in 98. I had a 492 FICO score, right? I brought that puppy up to 815. Okay? So if there's anyone that understands how bad credit can be, it's this guy. So 916-872-7177. Log on to promortgagerealty.com. We're coming up on a break, and I would like to say thank you for tuning in. We'll be right back after this.
I'm Jessica Couch. When you're buying or selling your next home, work with an experienced team that knows the business, a local team that knows the market, and that has the skill set to take care of every single detail. We will get you top dollar if you're selling, and we'll help negotiate the best deal if you're buying, all without spending a dollar out of your own pocket. Work with Pro Mortgage and Realty. At Pro Mortgage and Realty, we cover those out-of-pocket expenses like inspections, appraisal, and help with your closing costs. It's our commitment to make your next real estate transaction easy and stress-free as possible. We're not all about business. At Pro Mortgage and Realty, we've developed deep roots in the community. We've partnered with local nonprofits, and we give back. Come work with the team that's got your back. Call or text today. Jessica Couch of Pro Mortgage and Realty, 916-532-8916. Or visit us at promortgagerealty.com. Work with the pros.
NMLS 351319, DRE 01745667.
Sweet Dreams Foundation is a 501c3 nonprofit whose mission is to glorify God by spreading peace, hope, and love to families with medically fragile babies and children. They offer dream bedrooms to children battling life-threatening illnesses, and their Ruse Baby program creates an atmosphere that will lift the spirit of the child, where they can laugh, play, and let their inner light shine. To learn more about the Sweet Dreams Foundation, visit sweet-dreams.org. When you work with Pro Mortgage and Realty, you're supporting the Sweet Dreams Foundation. Partner with Pro Mortgage and Realty today to buy or sell a home and help support the Sweet Dreams Foundation to help more children in our communities. Call or text Jessica Couch of Pro Mortgage and Realty today at 916-532-8916. That's 916-532-8916, or visit promortgagerealty.com. Work with the pros. Pro Mortgage and Realty. NMLS number 351319 and DRE number 01745667.
Welcome back to Real Estate Profits with Purpose. I'm your host, Ian Boshoff, here with Jessica Couch. How's everyone doing tonight?
Excellent.
All right.
Glad to be here tonight.
We've been talking about should I buy now or wait for rates to drop?
I think we've
No, you shouldn't wait for rates to drop. You should buy now.
Yep.
Or yes, you should buy now, and no, you should not wait for rates to drop. So
yes.
It's and we'll just kind of segue this. The reason why you don't want to wait is this. The California Economic Outlook, according to the California Association of Realtors, and those of you who are nationwide, there's still an effect here. Unemployment numbers are projected to be higher in 2024 to 5% unemployment rate versus 4.6 where we're at now. In the U.S. Economic Outlook, right now the nation's at 3.7. It's expected to be at 4.4.
So it's good. Unemployment's going up altogether.
Unemployment's going up. You know what happens when unemployment goes up?
Rates come down.
That means we're in a recession, folks. And so when the way you get out of a recession is you lower interest rates to increase spending. And they lower interest rates to increase spending because when rates are low and money is cheap, they start spending more money.
Yep.
And what does that do for our economy when you start spending money?
Oh, it starts turning our economy.
Yeah, it starts kicking it going.
Yeah.
That's going to get us out of the recession, right? Because now we're caught up with inflation, and now we need to get out of recession. And so what's going to happen? Rates are coming down. Well, rates are coming down. How many more people are going to be in the market looking for a house?
A whole bunch.
Okay.
And it's going to affect what you can get and those seller credits that I may not be able to get for you next year when we are fighting against, when there's
Bidding
8
war.
offers,
Bidding war.
we're offering over and we're not getting anything back. Right now, when I'm the only offer on a property that's been on the market for 2.5 weeks, you betcha we're cleaning up.
Yeah.
We're taking everything in a bag of chips. And if they don't give it to us, we'll go to the next one down the street. And I've got enough inventory to get that deal for you right now.
And she'll get you a bag of chips.
Yeah. Bag of chips on Jessica.
She'll get you a $30,000 credit and a bag of chips.
I'll pick you up in my Tesla. You don't even waste your gas. We've got all electric. We are green over here and
Can
out
you
to
eat
shop.
chips in your Tesla?
I will let others eat chips.
okay.
I run. I can't really eat chips.
Okay.
It's not my diet, Ian. But
Obviously, it's in mine. I like chips and cheesy poofs. Oh, good. Well, I mean, I think that the proof is in the pudding. Right now, you're going to be able to negotiate. We've been saying that throughout the show, and you're going to be able to get those 2-1 buy downs. You are the queen of 2-1 buy down. We do it with every client. I'd say 100% of every deal I've seen has been a 2-1 buy down.
yeah, we've been using this since you made me aware of this program.
Yeah.
I don't know, some time ago. We've been using it all year. It's
Yeah.
been a fantastic program.
And it doesn't have to be a 2-1 buy down. There is a 1-1 buy down
Sure.
where it's 1% lower for 2 years. There's a 2-1 buy down where it's 2% lower for the first year, 1% lower for the second year. Then there's a 1-0 buy down where it's 1% lower. And the 2-1s, there's actually a 3-2-1 where it's 3% lower, but holy credit. I mean,
holy credit.
Yeah, that holy credit. There's like a 3% credit there. And then if you're like Jessica, you get a credit for the closing costs. So there's another, that's like 4 or 5% credit. You may be able to get that on houses sitting. You may be able to get that with a good agent, but there are options. So don't just discount interest rates. And I know we keep on saying it, but the one thing I wanted to dive into is we were talking just earlier about these cash buyers. How do we compete with these buyers? Well, the 2-1 buy down is that doesn't help when we're asking for credit. So we pick and choose our battles on what type of property we're going in on
Absolutely.
offer. Right?
Absolutely. If
So
we can find something that's good, financeable, and it's been on the market more than 2.5 weeks, that one is prime for credits.
Got it. Okay. And then the stuff, what about all the upgraded properties? Those are harder to get in contract with because everyone else liked those, right?
We just got into contract on 2 of those, though.
Okay, I'll
2,
shut up
they
then.
no. I mean, we just got into contract on 2 of those. We made a really good offer. You contacted the agent right away. We were able to get into contract on both of those. First offer for 2 clients in a row.
Well,
and both of them were flips and ready to go.
Well, that leads me to my next question. How do you get your offers accepted?
Well, we write a 24-hour expiration, call and chat with the agent, make sure they know we're a team. This whole deal's in-house. This isn't being parted out to, here, there, and everywhere. We have control of it. We know what's going on. You're working with the team. We respect our timelines. We are going to be quick on our inspections. We cover all the inspections up front as well and your appraisal. So we are really out for best deal for you. We've got a great group of vendors. We just knock it out 3 days. We're just bam, bam, bam. Roof inspection, home inspection, pest inspection. If we need additional inspections, they're done. And a seller really wants that assurance that you're making a decent offer, even if it's going to be less money to them, that they're going to get it done quickly and that they have the reason to believe we're going to respect those timelines and knock out our contingency periods real quick.
15-day closes. Those are crazy. And so it's, and just imagine that in the 15 days, 4 of those days are weekends where banks are closed.
So true.
So that gives me 11 days to close a deal. And so that is the kind of business that we're trying to do, and that's how we're able to get offers accepted with the short contingencies, a killer plan and contingency removals to ensure the sellers are not going to be sitting on their hands waiting for that. And then the types of homes that have high competition, you've got to be realistic. So if you're going in and requesting 5% credit on a house that everyone loves, and there's 50 people in this open house, and you're going in under asking price, you're probably not getting accepted,
True, especially if it's brand new to the market. But, the one that we got 5% back on just recently at 614, there were 4 other properties in the neighborhood. Now, we liked this one best. It had the best vinyl floors. It had, it just had the best look altogether, the largest backyard. A lot of great things about this property, but there were 4 others. So we were able to negotiate a good deal. And this property had only been in the market 11 days when we found it.
That's awesome. I love that.
Yeah. So I think it's just a matter of what's out there and make sure that we see all the inventory. Don't get your heart set in the first one to make sure we have a 1, 2, 3, 4, and 5. And then we can really negotiate on your behalf.
Guys, call Jessica Couch, 916-532-8916. she knows what she's doing. So I think she can help you get into a multi-unit. We're emerging into the commercial market.
Yeah.
So if you're an experienced homeowner, we're doing some commercial stuff now. So you want to also log on to promortgagerealty.com. Be sure you follow us on the Real Estate Profits with Purpose YouTube channel and subscribe. Those are amazing insights so you can stay educated in this market.
I think that's what it's really about,
yeah.
is bringing that education. This isn't some secret that we have and you don't. We want to educate all of our friends and family to make sure they have the best, most pertinent information to make the best choices with.
Yeah.
And when you have all of those options, like you break down with the 2-1 buy down, how long are you going to be in this home? Let's take a look at, what sort of financing you want to use and what all of those options are, what all these fees are, what I can move, what I can't move. It's a matter of options. And when that's broken down and you're educated, you can make a good decision.
Amen. I agree with you, Jessica.
Well, I know I've been in this industry a long time and I've worked with some other lenders and I just hate it. This is like snake oil salesmen when they're like, oh, just pick this one. Nothing's explained. Nothing's broken down. The numbers change. I'm like, no, I want to have a trusted source that's going to give all the options and have complete and total transparency. And that's what you get when you work with our team.
And
everything's in-house and you're getting transparency and education. And
trusted source, Jessica is one of the only one that I know of, the approved agent that has a relationship with Panda Express, and so she works with corporate accounts.
Yep.
And we're doing a lot of things in the community. 10% of our profits here are donated to the Sweet Dreams Foundation. And what do they do, Jessica? Can you remind?
We do dream bedrooms for children battling life-threatening illness. We also have a NICU program with Ruse Wraps, and Panda has been instrumental in helping us, not only with, as a corporation, we're able to handle a lot of their buyers and help them. So if you have a corporation, you want to get involved, you want to give something back to Sweet Dreams without $1 or any energy out of your own pocket or energy from your staff, you want a great deal for your employees, call us and we can make that happen. We've got a special deal for big corporations.
Yeah, and
go to even small corporations. Yeah,
go to Panda Express too, because they're doing some great stuff in the community.
They really are.
They really support not only their staff in homeownership, they also support these wonderful causes. So it's good to support those local non-publicly traded companies. We love the small companies.
Yes, go eat some chow mein. And I mean, I can't tell you how many people I refer to that business that are working at other places that are not recognizing management and the line to move up laterally within the company. And Panda really does that for their employees.
That's true.
So great corporation.
While we're talking about that, if you are an agent or a new loan officer or an existing loan officer and you're not happy with where you're at and you're kind of hurting during this time and you need some strong guidance of a solid team, we are doing this. We're mentoring these people and we're bringing them on a part of our team. Give us a call. Log on to promortgagerealty.com. Put in a message. Tell us about what you're doing, what you'd like to see, and we can set up a meeting with you, Jessica and I, and see what your long-term plan is on a career. So
I love to talk with agents that are doing 8 to 10 deals and want to double that. Absolutely, and it's not that hard. It's just a little move.
Yeah, that's perfect. I think honestly, give us a call, 916-872-7177. Lastly, I do have a listing in Rockland.
That's the big one, right?
That's a big one. It's a small 5,306 square feet. It's a 7-bedroom, 5-bathroom shack.
Huge. Yeah.
And it's in Whitney Oaks. It's a gated community. Yeah, it's a PGA golf course. They've got pool. They have a fitness facility. They've got a clubhouse. They've got it's a public golf course. It's a beautiful, beautiful property in a highly rated school district. That's listed for $1,499. I think we're going to go down and drop it a little bit. We're going to have an open house on Friday, Saturday, and Sunday. So you don't want to miss that opportunity. Text me to 916-872-7177. We're wrapping up this show here. And Jessica, I just really want to say thank you for always being here as a co-host, and she's an instrumental piece to Real Estate Profits. So
thank you so much.